Welcome back to the channel. Today, we're diving into a topic that's on everyone's mind: how to legally pay less taxes in the USA for 2025. Look, nobody likes forking over their hard-earned money to the government, right? We'd all rather keep more of it for ourselves, invest it and watch it grow. So in this video, I'm going to break down some seriously powerful tax strategies that can help you do just that. We're talking about maximizing deductions, leveraging credits, and making your money work harder for you. Let's get started. Alright, so before we jump into specific strategies, we need to talk about the big picture tax planning. It's a crucial aspect of financial health that often gets overlooked until the last minute. But here's the thing. Waiting until April to start thinking about your taxes is a recipe for stress and missed opportunities. This isn't something you want to do last minute, scrambling to find receipts in April. Imagine the chaos of trying to piece together a year's worth of financial activity in just a few days. It's not just stressful, it's inefficient and can lead to costly mistakes. Trust me, I've been there and it's not pretty. The frustration, the anxiety, the feeling of being overwhelmed, it's all too common. But it doesn't have to be this way. With a little bit of planning and foresight, you can turn tax season from a nightmare into a manageable task. The real magic happens when you plan throughout the year. By keeping track of your expenses, income, and potential deductions on a regular basis, you can make tax time a breeze. It's about being proactive rather than reactive. Think of it like this. You wouldn't just start driving without knowing your destination, right? You'd plan your route, check the traffic, and maybe even look for some interesting stops along the way. The same principle applies to tax planning. You'd map out your route, anticipate traffic, maybe even scope out some gas stations along the way. This kind of preparation ensures that you reach your destination smoothly and efficiently. Tax planning is the same idea. It's about mapping out your financial year, understanding the landscape, and making informed decisions that will benefit you in the long run. You want to set yourself up for success from the get-go. This means being aware of the tax code, knowing what deductions and credits you qualify for, and keeping meticulous records. This means understanding the tax code, knowing what deductions and credits you qualify for, and making informed financial decisions throughout the year that minimize your tax liability. It's about being strategic and intentional with your finances. Remember, it's not about how much money you make, it's about how much you get to keep. By planning ahead and staying organized, you can maximize your savings and reduce your stress. So don't wait until April. Start your tax planning today and set yourself up for a successful financial future. Now, let's talk about one of my favorite tax-saving tools, retirement accounts. These accounts are not just for the wealthy or financially savvy. They are accessible to almost everyone and can make a significant difference in your financial future. Specifically, we're going to focus on 401(k)s and IRAs. These two types of accounts are among the most popular and effective ways to save for retirement, while also enjoying some fantastic tax benefits. These accounts are like cheat codes for building wealth and slashing your tax bill at the same time. Imagine being able to grow your savings without the constant worry of taxes eating into your returns. Here's why they're so powerful. First off, contributions to these accounts are often tax deductible, meaning you can lower your taxable income for the year you contribute. This is a huge advantage because it allows you to save more money up front. That's right. You're essentially getting a discount on your taxes just for saving for retirement. This immediate tax benefit can be a game changer, especially if you're in a higher tax bracket. And it gets even better. Your money grows tax deferred, which means you don't pay taxes on any earnings until you withdraw them in retirement. This allows your investments to compound and grow much faster over time. This is huge because it allows your investments to compound and grow much faster over time. The power of compounding cannot be overstated. It's like a snowball effect where your earnings generate even more earnings. And let's be real, who doesn't love free money from Uncle Sam in the form of tax savings? But the benefits don't stop there. Many employers offer matching contributions to your 401(k), which is essentially free money added to your retirement savings. This employer match can significantly boost your retirement savings over time. It's like getting a bonus just for doing something you should be doing anyway, saving for your future. So if you haven't already, consider opening a 401k or an IRA. Your future self will thank you for taking advantage of these incredible tax-saving tools. Remember, the earlier you start, the more you can benefit from these accounts. Happy saving! For all my fellow entrepreneurs and work-from-home warriors out there, this one's for you. If you're running a business from your home or even just working remotely for a company, you could be eligible for some sweet home office deductions. Now, I'm not talking about writing off your entire house here. The IRS has some specific rules about what qualifies as a dedicated workspace. But think about it. A portion of your rent or mortgage, utilities, internet, even office supplies could be deductible. That's right, your home office just became a tax-saving powerhouse. But here's the key. You need to be organized and keep good records. Make sure you have a dedicated space that's used exclusively for work and track all your expenses meticulously. Trust me, when it comes to taxes, documentation is your best friend. Alright, let's talk about tax credits. These are often overlooked but can be incredibly valuable. Imagine finding a hidden treasure chest in your backyard. That's what tax credits can feel like when you discover them. These are like gold nuggets in the world of tax savings because they directly reduce your tax liability dollar for dollar. Unlike deductions, which only reduce the amount of income that is taxed, tax credits reduce the actual amount of tax you owe. That's right, I said dollar for dollar, not just a percentage. This means if you have a tax credit worth $1,000, it reduces your tax bill by $1,000. It's like getting a discount on your taxes. Two of my favorite tax credits are the education credit and the energy efficient home improvement credit. These credits not only help you save money, but also encourage positive actions like pursuing higher education and making your home more environmentally friendly. If you're paying for college or other qualified education expenses, you could be eligible for a credit of up to $2,500 per student. This can include tuition, fees, and even some supplies. That's a significant chunk of change that can make a real dent in your tuition bills. Think about it. $2,500 per student can really add up, especially if you have more than one child in college. And if you're looking to make your home more energy efficient, there are some awesome tax credits available for things like solar panels, energy-efficient windows, and insulation. These improvements not only help the environment but also increase the value of your home. Not only will you be saving money on your energy bills, but you'll also get a nice tax break in the process. It's a win-win. Plus, these energy-efficient upgrades can make your home more comfortable and reduce your carbon footprint. So, whether you're investing in your education or your home, these tax credits are like free money from Uncle Sam. Don't miss out on these opportunities to save. Now, let's talk about a tax-saving strategy that not only benefits your wallet, but also allows you to make a difference in the world: charitable donations. When you donate to qualified charities, you can often deduct a portion of those donations from your taxable income. This means you're not only supporting causes you care about, but also reducing your tax burden in the process. But here's the thing, you need to be strategic about it. Make sure you're donating to legitimate charities and keep detailed records of your contributions, including receipts and acknowledgement letters. And remember, it's not just about cash donations. You can also deduct the value of donated goods, like clothing, furniture, or even vehicles. So clean out those closets, donate to a good cause, and enjoy the tax benefits. Thanks for watching. If you found this video helpful, make sure to give it a thumbs up and subscribe for more tips on personal finance and investing. See you in the next video.